All right, let's get into the stock market technical analysis. I'm going to go through the broad markets. We'll look at some individual trade ideas. Let's dive right into it. Guys, if you're interested in getting additional market insights, additional videos, different trade ideas, link in the description below. I put out a private member video first thing this morning, kind of showing what the charts look like and giving out those trade ideas. So if you're interested in that kind of stuff, feel free to join up. Link in the description below. If you're not interested in it, that's fine. Drop me a thumbs up. I do appreciate it. All right. Triple Qs. Not a whole lot has changed on the daily chart. We're looking at the daily here. So we're still kind of trading off of this big bearish rising wedge. That wedge has been broken. We're really kind of chopping sideways. Not moving down on the daily yet. Not really moving up. We do have big negative divergence on the momentum, and the major target still stands of this wedge down around, let me kind of mark it out again since I deleted it. Major target, take the widest part of the wedge. You know, if you consider this the point of the breakdown, that sends us there. If you consider it here, you know, regardless, it sends us down to about 467, somewhere right around there for the next move. However, the 200-day moving average, you should see a bounce. That right now is sitting at about 483. So a move down there would be a very likely spot for the buyers to step in and buy. You should see a bounce at the 200-day. They might, if it's coming down with a lot of momentum, it could undercut and hit that measure target. Then I think it would probably snap back. Again, I usually when you hit the 200-day, you're going to, at a minimum, get a reaction. And so that's what I'm expecting, us to drop down to the 200 and get a reaction on the daily chart. If I go down to the hourly chart, what happened today, obviously I had been talking about looking for breakdowns and looking for sell signals and talked about how I was entering into short positions over the last couple week or in a week, a few days, something like that. And today, gap down. Okay, we hit some support here on the hourly chart at about 5, 10, 20, 50 or so. Rallied up and we filled the gap. Didn't quite fill it, but close enough to fill the gap. And then the sellers start to step back in. So I think that's it for the rally. I don't think we're going to go much higher. They might pop it intra-hour, but I do think it gets sold into. So I'd be looking for an hourly close above 521.36. And, that you're probably going to see some more upside and maybe to the top of the range. Okay, the top of the range is all the way up here at 532.39. But I don't think we're going to get that. I think we're heading down to the bottom of the range. And as far as I can tell, it's pretty much down here about 502. I think we kind of head back down to that level that we gapped down to today. Probably see another bounce there. And then head on down to 502-ish, somewhere right in there. Okay, that's in the short term. That's the hourly stuff. If I go to the weekly chart, bigger picture, this is the stuff I've really been talking about now for, well, going on almost 2 months. It's about a month and 3 weeks. But there's your big bearish engulfing candle on the weekly. That remains the top. So again, if you treated that as a top, you don't want to see a weekly close above it. But if you've treated that as a top so far, you've been rewarded for that. Regardless of the little counter trend rally today from gapping down, you're still profitable on this weekly chart by 2 7/10%. So again, I'm looking for that to continue to hold. And that's it. If it doesn't hold, we stop out. If it does hold, then we should continue to work our way lower over the long time frame, heading down to the 200 for the next area of pretty decent support. Okay, NVIDIA gapping down, breaking some support. I think we're actually, we're below the moving averages, and we are, kind of closed right on it. It's pretty close. You can't quite say it's a full breakdown, but it's very close. So any more real downside from current levels on a daily close should signify that this thing's continuing to roll over. Again, the sell signal on NVIDIA, you got this uptrend line here. All right, there's your uptrend line. and we broke trend right there. And we back tested, very objective back test and a very objective rejection. So, and it's going lower, all right? When you see these kinds of things, it tells you this stock's going lower. And sure enough, hit support, bounce, gap down, lower, lower, lower. So that's what I'm anticipating. To me, it looks like sell the rip. This was by the dip on this rally. And this is the beginning of a new trend. At least that's what it looks like. And the trend is to the downside. So that will be that. And believe me, if this thing rolls over, it's going to take the market with it. Big tech, this one, Apple, Microsoft, these big tech stocks are so heavily weighted when they sell off, they just essentially wreck the market. So that's it on NVIDIA. I mean, you can see here Apple gapping down, closing, not on the lows, but pretty close. So not much of a rally in this kind of stuff. In general, we still see, weakness. Objective back test. This was the objective area to short. I had one commenter today say that shorts got wrecked. That's what they say. The trolls come out and say some really stupid things. If you're short Apple at the objective level, which is the back test of resistance right there, okay, there's support, back test of resistance. If you're short at that key level, you didn't get wrecked. Yeah, you gave you're never going to be at the max, the max gain. Stocks move around. But from there, you're profitable as of the close today by 7 8/10%. Okay, so that I wouldn't say that's getting wrecked. Probable by, almost 8% on this Apple trade. Again, 200-day down below. They're probably going to battle it out and try to hold the 200. We haven't hit the 200 yet even, but they'll probably try to battle it out down there again. So you could see a bounce at 219. One way to play it, here, the way I think it'll go, we'll head back down to the 200 on Apple. And then I don't think you're going to get like an impulsive bounce. This was kind of an impulsive bounce. I think you'll now kind of chop around and grind out and then ultimately break in the future. Could take a little while, but I don't think you're going to get the big impulsive bounce. Probably about a mild bounce. Meta, the only large cap tech stock really that was bullish today and up, but nothing really's changed. We're still, just kind of rallied up to this resistance level where the sellers seem to be sitting at. On Friday, they sold the thing down, created a doji candle there, and we are just, that's kind of the area that they're selling at. So again, if the rest of the tech stocks roll over, this thing should roll over too. It's, high correlation. And if I drop down to the hourly chart on Meta and kind of clean up the chart, you can see here we've got negative divergence there on the hourly. See the RSI and the PPO, it's rolling over, and yet we're kind of popping up, making new highs. These are divergent highs. They should get sold into. So again, I'm looking for lower prices here, regardless of whether they kind of grind it up and make new highs. Until you take out these divergences, and then nothing's really changed. You can continue to kind of build divergences and maybe pop up and grind around. You're not really going to go anywhere until you take out the divergences. And so those should get sold into. And BlackRock, I talked about this one on Friday and really talked about how that looked like a false breakout, a stop raid, and it was likely going to sell off. And so I gave my short some room. And I guess this is shorts getting wrecked here. This thing's down 5 7/10% today. So yeah, the shorts really got wrecked there. That looks like that trend's broken, that uptrend. All right, first leg down, back test, impulsive rejection. Should head lower. All right, should head lower. Whether we get another little bounce right here, it's because we're kind of at some support right there. Maybe we kind of bounce a little bit, but should head lower. Home builders, talked about this one over the last few days as, looked like a good short. Threw that out in the private member group. And sure enough, down 2.5%. So there's shorts getting wrecked some more. Again, I'm being sarcastic. The point is that, look, we're going to have gap downs. We're going to have rallies, especially in the beginning. Okay. The buy the dip crowd is going to show up. But it really matters, not necessarily when you see a gap down and the buy the dip crowd. I would just expect them to show up on something in the, kind of the beginning of a move down. But what happens, what's the behavior after the buy the dip crowd shows up? You rally a little bit, and then do the sellers push it back lower? And then the buy the dip crowd shows up, and then the sellers push it lower. Eventually, the buy the dip crowd won't be showing up, and that's usually when you're going to get kind of the ending move of a downtrend line, where you're going to see maybe like some panic selling. Volume will spike, and you'll see some big moves to the downside, and will probably fall right to some major support levels. And at that point, that's usually where you want to cover and exit your short. So we don't want to enter shorts necessarily on big down days. Like today, if you going back to triple Qs, in the morning we gapped down. You could have taken profit if you're an active trader, and if you wanted to do that. I'm not going to put out the videos on the public channel for active traders. I do put out charts and stuff for the private member group on more active stuff, but for the public channel, I can't get them out fast enough, and people aren't following. But you were at support and you rallied to resistance right there, so you could short at that resistance. Okay, you can add to shorts, but to wake up in the morning and all of a sudden just jump into a short on a gap down, that's not the time to do it. All right, that's why I talked about kind of taking positions last week on short, because things were looking like they were about to roll over. And so, yeah, you want to short into resistance, cover at support, just the same as going long, buying long and selling high. You want to sell high and cover low. So that is... okay, so anyways, interest rates, TNX, 10-year Treasury, still holding support. Nothing's changed. A little brief whip below, but they held that support. So it's my base case right now, as far as I can tell, and this could change tomorrow, because when if we're to break this support, it changes my base case. But as of right now, what it looks like is you've got a uptrend in interest rates, the 10-year. We're going to make another leg higher. I think we push up above those former highs, right, that we made back in October of 2023. Spike the highs. There'll probably be a divergent high at that point in time, and then the market should be in full panic mode, and we should start to see, and that what that means, full panic mode, is I think that's when the triple Qs and things are going to be dropping down to the 200-day moving averages. Maybe take them out. I don't know. We'll see. But I think we're going to go up in interest rates. The market will start to take notice. Maybe not initially, but once we start kind of popping these former highs here and heading towards the cycle highs that we've been in, then the market should really take notice. So that's my base case. And so things like XHB, home builders, gold, I think is going to come down. Gold miners, I can cover those real quick. See, gold is, gold miners, these still look okay. You've got an uptrend line. You're kind of just walking up that channel. I don't see any divergences on the daily chart, so maybe gold wants to continue higher. For me, I'm not shorting it. I don't see a very clean and clear trade there. But if those interest rates continue higher, this should affect gold. Okay, it really should. So I would keep an eye on those interest rates. Wheat still looks good. Looks like we're kind of testing the former. There's a couple reactions here on the daily. All right. And so kind of testing that. The one that I also like is MOS. I pointed this out early this morning in the private member group, that we basically hit support, said it was an objective long right when we were down there. And then from there, the thing rallied, it basically rallied up 2%. So that was a 2% trade if you just took that trade. Now we're below the 200-day moving average on the daily. So I can easily see us going back down and testing that support line again. Usually when you're back testing, you don't just back test it like one day, but maybe, because again, we're on a breakout here. This is buy the dip. This is a buy the dip stock. We have a big bullish falling wedge. We have bullish divergence. It's been building. I mean, even if you go back here, big bullish divergences have been building. We have broken out of the wedge. So nice impulsive breakout. And we're back testing. So it's objective to buy the breakout. All right. It's objective to buy the back test. Again, I don't want to be buying this thing after it's rallied and we're like way up here and then, oh, time to pile on long. It's not when I want to buy it. I want to buy it when it breaks out. I want to buy it when it back tests. I want to buy it when it's at support down here within the wedge. Those are the objective areas to buy this thing. So that's what I was doing. Added to this position today at that key level of support, and it was a profitable profitable add-on. And so again, maybe we get more opportunities for more back testing. I could see that. That's very possible. It could kind of head back down, and especially if the market continues to sell off, this will probably get dragged down a little more and continue to back test. Okay. Again, the major target on this one, you take the widest part of the wedge, okay, and it's right in there at the point of the breakout, which is about there, and that's your major target. It's about 41.75. So a back test here, if it does rally to that major target, will be a gain of 57% to that major target. So that's the trade. I'll continue to kind of review it as it goes, but takes time to kind of develop, but nothing's broken here. This still looks like a great long. S&P 500, again, this one, it's chock full of defensive stocks, but the heavy weighting is the tech stocks. So where they go, this should go. So triple Qs for me is kind of the guide on this, but we're recently coming off a divergent high. So there's a former high over the previous high, and you can see the momentum dropping off. All right. PPOs starting to turn down, about to do a crossover, and that's it. They have so far, regardless of what you see in the headlines, for the most part, I don't even watch the headlines because I just usually can almost tell you, I can't tell you the headline, but I can usually tell you whether something's going to be floated out as bullish or bearish, typically by what the charts are telling me. And what I can see here is we're just coming off a divergent high, so they're likely going to continue to sell it. And so we'll probably get some more negative news about the tariffs, or, I guess that's what it's going to be. But to me, this looks like we're heading back down lower. So yeah, little counter trend rally, gap it down, and then they rallied up. Again, that kind of shakes the late to the party shorts, because if you shorted on a gap down this morning, they like to shake you out of the trade and not just gap down and then just dump the thing. I mean, markets aren't going to crash. I don't expect markets, the stock market and individual stocks, to crash when you first start a new move down. And these negative divergences that have been building for a long time, they're pretty extended. They are, that's a potential trend line. They are indicating that we're likely going to, have a minimum of correction and possibly a lot more to the downside. So the way it works is usually, and I can go back, I'll just give you guys an example. But when markets start dropping, like here's an example. You drop, you rally, there's a big move, but then you rally. Okay, you're not going to just crash. You're going to have typically counter trend moves, and especially in the beginning with the buy the dip crowd. All right, so that's what I'm expecting. I'm expecting kind of us to fall the slope of hope. Today was a little hope because they rallied it up. The bulls probably didn't get out because they saw the rally, so they feel like, oh, that's it. That's the end of the pain. And they read the headlines, and they think it's all over, and then we continue to kind of work our way lower. All right, I'm going to wrap it up, get the video out, and catch you guys on the next one.